Oh, it's on. What's going on, my design dude and dudettes? It's time to check out this. No! Are we in a bubble? I have no freaking clue, but there's definitely a battle going on. We have got a lot to talk about. It's time to democratize our personal wealth and finances, and that's why I'm here. I want to make sure we can kind of take charge of our future. There's a lot of people pulling the strings, and unfortunately, there's a lot of times where you know you and I are not in control of those particular strings. So let's figure out a way to take control. But what we'll be chatting about today are a couple closing and opening trades, and then let's talk about the overall market because it is feeling a little frothy, but some of us have been saying that for about 6 months now. So let's dig in. All right, so closing trade. This is a great one. The last 2 or 3 videos now have been covering essentially a new strategy that isn't even related to stock picking basically or trade picking, but it's actually related to my exit points. And after enough back testing, seeing how this works out, I guess you can call this portfolio theory. It's impressive. I've been pretty happy with the results, and Baba is another one of those particular, between 1 and 4 day trades that have seemed to work out pretty well. So this one here with Alibaba essentially entered at the very close on Friday. I was out, but I had a couple limit orders in, and this one did trigger probably in the last 5 or 10 minutes of market close on Friday. And come to today, it's Tuesday, so we've basically been in the market for 2 days in trade, and we had a very nice profit here, basically 30% profit, 2 days. Working that out, I've been trying to look at things in terms of profit percentage per day, and so you cannot go wrong with almost 15% per day. So did close this out. We were entered in the 260 and 255 strikes. Just a great quick momentum trade. The numbers on return are awesome. A previous video for yesterday was that, and that worked out very nicely. So I'm a fan of that. Amazon was good, and that was a 20% gain on day trade in Amazon. So here's Alibaba. Not too bad. You can see it was up today, pretty much like everything in the market. But like I said, if I can turn around and sort of get those profits sooner, the better. So not too bad. Took a little risk off. Turnarounds fast, and then we had a new opening trade also, and this one's in Adobe, which some people might know. And Adobe, not too bad. We're looking at the 10/16 expiration. The 475 and 470 strikes. So let's go to Adobe here. I can show you that. Basically, we're trading right now. We're printed at 529.99, but my strikes are at 475 and 470. So basically, the stock has to go all the way down here, which is like an older support line, in order for me to lose money at expiration. So looking pretty good. Got a good cushion, a nice buffer, and to be frank, I'm also targeting kind of a similar thing. So my first target essentially is going to be about a 20-25% return on this trade in about 3 to 5 days. So if I can, the sooner the better. But as we break out past that, if we get to basically the end of the week or early next week and we still haven't hit that target, then we shoot out for the next target, which is going to be 50%. And I've seen from this style that typically that plays out to about 12 to 21 days in trade to hit like 50 or 60% profit. So not too bad. We'll see how it goes. Future videos I'll definitely showcase this so we can see how it closed out and how we did. But we took in $142 on writing that option. So not too shabby, but Adobe I'm a big fan of, and I can kind of talk a little bit about some other stuff too. It looks like they're going to have 6, 8, 9. So we are looking at maybe having earnings soon too. So that's something to peek at. But generally speaking, that doesn't really play into my strategy. I'm not a big fan of wasting time on looking at earnings events. And from what I've seen, the way I've tested this strategy, it seems to work well during events like that, especially since I'm keeping it one-sided. So now let's talk about the markets. This is okay. Let's talk about Docusign. So Docusign had a monster of a move today, 20% gain. Same concept here. Apparently the stonks are just crazy going up. I'm personally, we're going to see growth here, right? Naturally, you don't want people signing papers in person. I remember many moons ago, DocuSign was a lifesaver. I hated having to have all this back and forth, and then when PDFs were annoying. You had to print them, then fax them, then you had to like amend something because the bankers or the loan officers wouldn't accept it, and then you had to just literally redo the process over again. So DocuSign made life so much easier. But here's where I have an issue, is that all you need is Adobe, right? The trade that we opened today. You just need Adobe to basically pull a Zuckerberg and clone, whatever model someone else in your vertical is doing. And Adobe could put these guys out like nothing. So I think that's a single security risk someone needs to be aware of if you're ever, interested in DocuSign. But I am, in usual fashion, it seems like everything is having a great 2020 that has to do with anything stay at home or anything remote or anything technology related. So good on them. Oh, speaking of technology related, let's talk about Walmart. Oh goodness. So Walmart printed about 7% today. They had a great gain. Coming off, I think, another 6 or 7% like 2 or 3 days ago. Talked about it in a previous video. And this is where things feel frothy to me, okay? So Walmart is thinking about having a subscription service, and the other big news is talking about potentially buying TikTok or partnered purchase TikTok with Microsoft. So great, that's neat. It's, TikTok's the rage, political anger is the rage, like everything going on is just, if you can make it in the news, apparently you get a couple billion more in market cap, and that's great. But this isn't anything that Amazon's not doing. This isn't anything that Facebook can't clone or or anything. So this is where I have issue, is that if something like Walmart is going up on just rumors, then that already tells you that there's something going on. And I can't tell you like, oh, this means tomorrow things are going to change and it's going to get, more bubblier or more of a bubble, or we're going to see the bubble burst. I really don't know where we go tomorrow or the next day. Previous things to consider. So generally September is like the bear time of the year. So they say sell in May, go away, and then September is when the bears come out of hibernation. And so this is kind of, just, I guess if you're going historically off of all the little sayings and stuff, fine, think about that. I don't care so much about that as much as I do, just seeing what the market's telling us, and also what other factors and variables are at play. So, the thing I like to consider, or at least look at, is the indexes. So let's take a peek here. So SPY, you can see this is interesting. We've got to all new all-time highs, but on insanely low, just dripping volume. So here's a volume down here in this spot, and you can just see it's like So quiet. Like no conviction going up. So every print we're having every day with these tiny opens and closes, we're basically just saying like, hey, we're melting up, but really we're just sort of waiting for something, some kind of event, something that has to do with something that'll either give us conviction to go higher, or something that will just melt this thing down. So that's something to consider. I don't know. I can't tell you one way or the other. I can tell you we've had an interesting year where things have seemed to just crawl up, and it's almost looks like someone's pulling the strings, right? So you got to think about that. Now let's look at this. The Qs, same thing. The Qs have definitely been the strongest, and this is the technology ETF. So we're represented by like Tesla or Apple, Tesla, like all these tech-based stocks are represented here, and clearly it's doing okay. Nothing that is crazy convincing to me. Let's see, a couple big volume spikes. Here, yeah, nothing too crazy, and I think that's the interesting thing. It's just so boring. Like, a lot of traders like to really see volatility pop up, and it usually gives you more conviction when you're kind of trading on volatility. I think the weakest out of this bunch is IWM, so small caps, Russell 2000, very flat trading, so very nice and neutral for anyone doing any neutral trades on options. That's great. But in terms of direction, it seems like we're just sitting there near or at new highs on most of these guys, and we're just waiting for something. So this is where it's getting interesting. Things are starting to dry up. We're going to start seeing people either getting evicted, or more money is going to get pumped into the system. So that's why I feel that we should be seeing some type of volatility event. So here's the VIX. You could see earlier in the year just a monster run up because of the volatility. And we've just sort of crawled down and down. Another nice spike, I think in June or something, late May. And that was interesting. And we just kept getting closer and closer to support here. So basically we kind of have filled this gap. And we're having a little bit of a volatility build, but there's a lot at play right now. There's, like we said, the Fed has been talking. Politics is very much at play, especially this year and coming up in the election. And then the actual socio-economic aspect of this across the world. So everyone seems to be impacted, but parts of the market are just pretending like we don't care. And where I get nervous, honestly, is that when we say, is this a bubble? You have to really say to yourself, well, all of my trades the last 2 months, I've had a 100% win rate. Okay, now do you expect me to basically win every single trade that I'm taking risk on in perpetuity, basically through the rest of the year, maybe even next year? The obvious answer there is no. Okay, so right now, the fact that I can go 2 straight months, essentially all winners, it's a combo of my selections. Typically, the way I trade, I try to find the highest probability setups, and that's been great. But, if I'm usually looking at 70-75% chance of success, I should see some losers in there, and I have not. Okay, so don't expect to always have winners for one. And then if you start seeing a ton of winners, you need to either be on the defensive or maybe a little bit suspect, or figure out where you're at on the risk curve. Now, the other portion of talking about, is this a bubble? This week, even within my own family, I'm now getting people who are kind of catching the mania. They're seeing Tesla, they're seeing Apple, they're seeing basically what the Reddit community call Wall Street Bets, Theta Gang, all these guys. you're seeing what they call meme stocks, basically just soar to the moon. And then you're seeing all the stocks I just showed you right here, kind of unreasonably reaching a sort of mania. Now, I'm not saying that this goes down tomorrow. I'm not saying that this goes down next week. But I am saying this will not happen forever. And so there needs to be a point in time where Docusign's business model can support its price and its future outlook price. There needs to be a time when Walmart, for some reason, can make up to the couple billion in market cap that they gained this last couple trading days. You know, there is a lot that we need to see. And if you kind of think of the curve, it's like, well, do we have a ton of people employed right now or unemployed? That's one thing. Do we have a ton of people going out and, I guess, shopping? I've seen a few interesting stocks too that are doing better, and they're all retail related, which is funny to me. There's just a lot that doesn't give me conviction to tell myself I would put every dollar in my account into, you know, this stock or that stock. Now, I am super bullish on a few: Nvidia, Tesla. I like aspects of Apple, but I don't agree with kind of the mania we're seeing across the board. However, you know, like I said, I think you just always need to keep your risk in check. And that's certainly where I've been these last couple days, couple weeks. I'd really say the end of last week and a little bit of this week, I've really been going risk off as much as possible. And so I've also been a big fan of the quicker trades, you know, these 2-day, 1-day, 3-day trades. And I'm getting, you know, reasonably good profits on pretty good stocks. So those are some things to consider. But I do need to always tell you, you know, I am not a financial advisor. I'm not, you know, someone with a license to basically tell you, you know, so and so and so and so. So this is me exploring, you know, my thoughts, my particular risk, my portfolio. And by no means am I telling you to do any of this stuff. I don't recommend it. I recommend you check your own risk. You check with your own professionals, financial advisors. These are all for educational purposes only. But that's kind of where I'm at least for today. And I do have a few other trades I'm looking at. So maybe if it makes sense, I'll start posting my watch list, and we can start going from there. So we'll see. Maybe leave me a comment or a like to let me know you like it. If you want me to start covering my future watch list, I'd like to know if that makes sense. And then you gotta subscribe. Why aren't you subscribed yet? Come on. We gotta help each other out. I decided to start this so that my newly adult nephews who just turned 18, graduated high school, can better understand their finances. They never had a chance to learn that from their parents or from school, and so the earlier you start, the better. So I want them to have a good head start and get an understanding, and they're having a good year. So I'm glad that we started this with them. All right, so I really appreciate you stopping by. Like I said a couple minutes ago, why haven't you subscribed? You're still here, and I just told you a little bit ago, and you still haven't subscribed. Hit the subscribe button. All right, I appreciate everything. I thank you for your time, and until the next one later this week, my dudes and dudettes, I'll see you later. Bye-bye.